Welcome to our in-depth technical analysis of METSERA INC, trading under the ticker MTSR on NASDAQ. Over the past 3 months, this stock has captured the market's attention with its dramatic price swings and explosive rallies. In this video, we'll break down the key technical signals, volume patterns, and what traders should watch for next. Whether you're a seasoned investor or just curious about this parabolic move, we'll guide you through the data and scenarios shaping MTSR's current landscape. Let's start with the big picture. Since late June, MTSR has more than doubled, surging from 26.65 to a peak of 54.47 by late September. This 104% gain is not just impressive, it's rare for a stock of this size. The most dramatic move came in mid-September with a single-day rally of over 52%. Such rapid advances often signal a mix of aggressive buying and speculative momentum, setting the stage for both opportunity and risk. Volatility in MTSR has been nothing short of extreme. After the parabolic surge on September 22, the stock closed slightly lower at 53 the next day, suggesting some profit-taking. Despite this minor pullback, the overall trend remains sharply bullish. However, such vertical moves often lead to exhaustion signals, where buyers may start to hesitate and sellers look to lock in gains. Volume tells its own story. On September 22, MTSR traded over 20 million shares, an all-time high for the stock during its 52.5% rally. The following day, volume dropped to about 6.8 million shares as the price pulled back slightly. Over the key period from September 11 to 23, daily volume averaged 8.2 million shares, 5 times the 3-month average. This surge in trading activity confirms strong institutional and retail participation, but also hints at overbought conditions. Price and volume move together, it often signals a genuine breakout. In MTSR's case, the alignment of surging prices with record volumes validates the bullish move. However, this also raises a red flag. When volume spikes coincide with sharp price increases, it can indicate the market is becoming overheated. Traders should be cautious, as such conditions often precede corrections or sharp reversal. Let's look at the moving averages. The current price of 53 is well above all major short and long-term averages. For example, the 5-day simple moving average sits at 41.73, while the 50-day is at 36.07. Even the 150-day average trails far behind at 29.64. This steep separation shows just how powerful the recent uptrend has been, but also suggests the stock is stretched far above its historical norms. Short-term moving averages, especially the EMAs, are rising at a steep angle. For instance, the 5-day EMA is at 44.8 compared to the 5-day SMA at 41.73. This difference highlights explosive momentum in the short run. When EMAs outpace SMAs, it often signals that buyers are aggressively pushing the price higher, but it can also mean the rally is becoming unsustainable. Looking further out, the long-term moving averages, like the 100-day and 150-day SMAs, are still far below the current price. This confirms that the overall trend for MTSR remains bullish. However, when the price gets too far ahead of these averages, it can signal that a pullback or period of consolidation is likely as the market catches its breath. Momentum indicators are flashing strong signals. The MACD is positive at 2.72, and its histogram is also bullish. However, the RSI at 75.79 and the stochastic RSI at 96.29 both indicate extreme overbought conditions. This means the stock has been bought aggressively, and a pause or pullback could be on the horizon as buyers become exhausted. Trend indicators show a mixed picture. The ADX at 17.72 suggests moderate trend strength, while the Arun up at 96 and the Arun oscillator at 21.43 confirm that the upward trend is still dominant. However, the moderate ADX reading means the trend could be vulnerable to sudden changes, especially if selling pressure increases. Volatility is another key factor. The ATR at 3.72 points to a wide daily trading range, while the CCI at 328.18 suggests the advance has become unsustainably parabolic. High volatility can create both opportunities and risks, as prices can swing sharply in either direction. Traders should be prepared for rapid moves and adjust their strategies accordingly. Despite the price rise, volume indicators like OBV and the Chaikin oscillator are showing minor distribution and selling pressure. OBV is at -2.61 m, and the Chaikin oscillator is at -4.01 m. This means that while the price has surged, some investors are quietly taking profits, which could limit further upside unless new buyers step in. Other strength indicators like the ultimate oscillator at 63.94 and ROC at 48.63 confirm the bullish momentum but also warn of exhaustion. When these indicators reach elevated levels, it's often a sign that the rally is running out of steam, and a period of consolidation or correction may follow. Linear regression analysis shows that the current price is trading far above its sustainable trendline. The slope is positive but weak, and the predicted value is much lower than the actual price. This massive deviation suggests speculative excess, where prices have run ahead of fundamentals and may be due for a correction. Looking ahead to the next trading day, the technical setup suggests a likely gap-down opening between 51.5 and 52.5. For the bullish trend to continue, the stock would need to open above 53.5, but this seems unlikely without new catalysts. Traders should watch the opening closely for signs of renewed momentum or further weakness. Key resistance levels are at 54.47, 56, and 58, while supports are found at 52.63, 50, and 47.5. The current price sits just below resistance and slightly above support, making these levels critical for short-term direction. Intraday, a move below 52.63 could accelerate declines, while holding above this level may spark a bounce. Intraday movement is likely to start with weakness toward the 52.00, range. If support holds, the stock could attempt a bounce back toward 53.50, 54.00. However, a failure at 52.63 could trigger a sharper drop to 50 or even lower. These patterns are typical in highly volatile stocks and require quick decision-making. Average True Range, ATR, projects a daily range between 49.28 and 56.72. Given recent volatility, traders should expect highs in the 54.00, 55.00 area and lows between 50.5 and 51.5. This wide range highlights the need for flexible strategies and tight risk controls. In the bullish scenario, holding above 52.63 could trigger another rally toward 54.47 or higher, especially if volume exceeds 5 million shares. However, this move would require the RSI to stabilize and overbought conditions to ease. Without these, the rally could quickly lose steam. Alternatively, the stock could enter a consolidation phase, trading in a range between 50 and 54 for several sessions. This would allow overbought indicators to normalize and give the market time to digest recent gains. Consolidation often sets the stage for the next big move, either up or down. Support at 52.63 fails, a bearish reversal could drive the price down to 50 or even 47.5, especially on high volume. A complete gap fill to 47.5 would mark a full retracement of the recent rally. These scenarios highlight the importance of monitoring support levels and being ready to adjust positions quickly. Given the extreme volatility and overbought signals, traders should consider profit-taking strategies and use tight stop losses to protect gains. New long positions should only be considered if support holds and volume returns to normal levels. Managing risk is crucial in such fast-moving markets. Sum up, MTSR is in the midst of a technically overextended rally, with extreme overbought signals and weakening volume support. While the long-term trend remains bullish, short-term risks are elevated. The 52.63 support level is critical. Holding here could enable consolidation, but a breach risks a sharp correction. Stay alert, manage your risk, and keep an eye on volume and support levels for the next decisive move.